the S&P index has emerged as a store of value. There was a time when you could actually take your cash, put it in a bank account, and generate 5% interest. And if you thought you were getting 5% interest and the natural inflation rate was less, then you would do that. Most people concluded that that wasn't good enough, and they actually became stock market investors or real estate investors. But there was a debate about what the inflation rate is. And so if you roll the clock back 30 years, some people, less sophisticated, would have put their money in a savings account. Other mid-sophisticated would have put their money in a mutual fund. And I'd say the highly sophisticated put their money in commercial real estate or real estate ventures. And the reason they put them in real estate ventures is because real estate offered greater property rights and greater leverage. You could lever real estate 5-to-1, 10-to-1, and more readily finance it without a mark-to-market. So I would say the really sophisticated long-term investors looked to commercial real estate or some real estate play. The convention was I put it with a mutual fund or I invested in an S&P index. And I would say the working class solution is I put it in the bank in a savings account or credit union, and I get 3, 4, 5% interest. That regime kind of disappeared maybe 20 years ago, or certainly 10 years ago, when the yield on credit when the yield on savings accounts went to zero.
Bitcoin has been making headlines in recent months due to its rapidly increasing price and newfound mainstream popularity. As of writing this, BTC has formed a new support level at $23,000, leading many to speculate on where it will head next. Hello and welcome to Money Talks. In today's video, Michael Saylor updates about his outlook for Bitcoin in 2023, the importance of regulatory clarity in the space and how it will drive the future of institutional adoption in crypto.
I think that it's pretty clear, by the end of 2021, after the pandemic crisis, we had monetized a lot of different assets. We had a spike in housing prices where we're monetizing. We're basically putting a premium on housing in excess of its utility value. We had a spike in commercial real estate. We had a spike in meme stocks and their value. We saw extraordinary spikes in collectibles, in watches, in sports cars, in artwork. So as the central bankers were flooding the economy with excess currency, the currency is trying to find a tangible asset that will hold its value as the currency debases. And everybody chooses a different one depending upon what they know and what they're comfortable with. Bitcoin, right, is one of those assets which is now being monetized, and it is rising through this chaos to be the apex property asset or the apex monetizing asset. So I'm of the opinion that we're going to see a consistent demonetization of other key assets, and one asset that you'll see demonetized, that we're seeing demonetized right now, is bonds. I mean, I guess the big three category, right, are maybe the big four: currency, bonds, real estate, and equity, right? Those are the four big asset classes that have been monetized by excessive money printing. We see, and gold is a small one, right? Gold is 10 trillion, all the other four are 10x more than that. So the big four are the currencies, the bonds, the equities, and the real estate. What I'm going to do is I'm going to focus upon real estate, because I really think the interesting discussion here is how Bitcoin demonetizes real estate. And what will it demonetize? Well, what does it mean to demonetize? Well, there's a value of real estate to a utility value to someone that's using it, right? The true utility rental value. And that doesn't matter whether it's a consumer or a business. There's a utility value to the real estate. And then to the extent that the price of the real estate is beyond that, that is the monetary premium. And there's a whole lot of commercial real estate that has a monetary premium. The way that you would know that it has a monetary premium is you think about all the people that have excess cash and they don't want to store it in cash. They don't have a safe bank account or a savings account to put it in. And their view is, I've got to buy an investment property, right? The world is full of people that have said, I bought a second investment property, or I bought a piece of commercial real estate, or I'm an investor in commercial real estate because that is the place that I wish to store my money, right? Why do you even want to store your money? Why do you even want to be an investor, right? The only reason anybody wants to invest in anything is because they believe that the risk-free rate of return on their money is too low to keep up with inflation. If I told you that the money was going to grow in value 10% a year and you knew the inflation rate to be zero, you wouldn't invest in anything, right? You would just put your money in a safe place and wait for it to create in value 10% a year. So in extreme hard money environment, the average person, right, the non-expert isn't an investor. The only people that really should be investors in theory are professional investors, right? Professional venture capitalists and professional investors that spend all of their time analyzing opportunities to ascertain the true long-term value of the cash flows. But the world is full of people that are actually making investments in order to preserve their wealth, and they're doing it because of the weak money. And so one of the places they make their investments is in real estate. Investment properties, it could be I got a second home and I rent it out. It could be I bought an apartment and I rent it out. It could be I Airbnb something. It could be I went in partners with 3 of my friends and we bought, a small garage, or we bought some warehouse or something. That's going on everywhere in the world.
HODL Conviction has reached an all-time high and is expected to remain so going forward. According to a report from Bitfinex, the BTC supply and profit indicator has increased by more than 20% in the new year. With this, we can predict a more bullish market in 2023. It looks like hodlers are starting to lose their conviction in their long-term investment. They believe that it is not the time to sell even if the market goes down. They also believe that hodlers should be rewarded for their patience and loyalty.
It doesn't take a rocket scientist to figure out that now I've got $2 million to invest. Do I want to own a $2 million warehouse in any city in the world, or do I want to own 100 Bitcoin? Seems pretty obvious, right? When you buy the $2 million warehouse, you are marrying the neighborhood zoning board, you're marrying the city, you're marrying the county, you're marrying the state, right? You're married for life to the country, right? You're conjoined to, and if you think all of those will go on forever or for your useful horizon perfectly, you've still got the issue of acts of God, right? Now you're exposed to earthquakes, tsunamis, floods, fires, lightning strikes, hailstorms, global warming, etc. And it's pretty clear, right, that commercial real estate was a good idea for property preservation in the 20th century. But in the 21st century, it's an antiquated idea, right? It becomes antiquated as the governments and as the society around the property decays, the property itself decays. For example, you wouldn't really want to own the most beautiful building there is in a country where the regime collapses, right? You could have a luxury hotel, but if the currency collapses and the government collapses, your luxury hotel isn't going to hold its value. So Bitcoin is now just beginning to come into its prime. And every time a new Lightning wallet is shipped, Bitcoin is upgraded. And every time a new layer 3 app is created, Bitcoin is upgraded. And every time a new miner comes online, Bitcoin is upgraded. And every time a new regulatory guideline is laid out, Bitcoin is upgraded. So Bitcoin is just continuing to improve its property. Real estate is continuing to decay its property. If we come back to your question, how does this get demonetized? Well, you can see that the only reason that a casual investor wouldn't start to shift their allocation of savings from commercial real estate to Bitcoin is they don't understand Bitcoin, right? Most of them, if you walked up to the typical real estate investor and say, quick, give me the 18 crippling defects in your real estate, they couldn't name the 18 things I just laid out to you. And you know what? I couldn't either before I knew Bitcoin. You don't understand the defects in your property until you see perfect synthetic property or digital property. Just like you don't understand the defects in your currency until you see perfect currency. If you don't understand Bitcoin, you don't know what's wrong with gold, right? And you don't understand what's wrong with fiat currency, really, until you understand what's right about Bitcoin. And I think the same is true with property holders. They don't understand what's wrong with their investment until they understand what perfection looks like. And most of them, when they hear Bitcoin, they just are afraid. Their reaction is just, oh, it's scary. I'm afraid. I don't know much about it. It's too volatile. And their brain shuts off, and that's like as far as it goes. So as we educate the population on Bitcoin, I think people start to create tables of the 10 defects in real estate versus Bitcoin. And then you go, wow, the only thing not to like about Bitcoin is it's new and volatile.
So, do you agree with Michael Saylor's take on Bitcoin? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.